All right, guys. Good morning to everybody. This is KEL. Can y'all hear me loud and clear? Yes? Okay, very good. That's very important for me. Yeah, okay. All right. Okay. All right. Now, today is the 1st of May, 2026. Crazy Global Market Talk with KEL. Crazy anytime, anywhere. All right. Guys, this morning we have a lot of good information to share with you. It's about the global market. Okay. And some of the information may be a bit scary to some of you. Some of you will think that it's absurd. You think that it's ridiculous. It's not possible. But that is how the financial market works. Now think about this, right? A couple of days ago, when gold was on the way down, everybody said sell, and we call for buy. Then everybody call for buy. What do? Right? We follow the market. So today I'll tell you more about gold and other markets. So stay tuned and let's go. All right. Now, before that, disclaimer apply as usual. Do always remember this to do your risk management. It's very, very important. All right. Okay, so let's see the fundamental what is happening in the world. Okay, let's bring you in. Okay. All right, so Donald Trump, as usual, said that his blockade will cause the Iran oil industry to explode this week. Okay, so we're trying to tell the whole world that if the continuation of the blockade at Iran, all right, the Strait of Hormuz, all right, most likely there will be no more transaction between them, and the Iran will have a big issue there. Well, I don't buy that. Now, let me explain to you why. Because first of all, most countries, they have 6 months of reserve, 6 months, 3 to 6 months, usually 6 months and above. No country will have lesser than 6 months reserve, okay? And because of that itself, being Iran, the producer of it, they have enough reserve. So I don't think that will be an issue. But you tell me that the transaction itself, money coming in, lack of money, now that is very possible since there is a stoppage before for letting people to come into Iran, right? But you must understand on the other side of town, there's still people sending stuff over there. So it's really not what Donald Trump said. Okay, but again, he's the expert, right? He knows everything, right? So I just leave it there. Okay, so now the thing is this: we all know that the 60-day deadline is going to come again as usual, and then what happened? Paco expected, yeah. And now the thing is this: Brent oil has hit $126 per barrel before pulling back yesterday. I believe there was some selling in the market yesterday to to what you call bring down the inflation worry. And we have the PCE inflation yesterday. The PCE core inflation came 3.2% in March. Now do note this 3.2% doesn't have the oil market. So I believe the next one will be even higher than 3.2%. Okay, so the first quarter growth is a disappointment of 2%. Yes. So what we have right now is that the inflation is higher and the GDP is lower. Now, this is exactly what I fear: stagflation. Stagflation is whereby inflation goes up and then the growth goes down. Now, when you have this itself, is a very big issue. It's worse than a recession. Recession, you have inflation down, and you also have this you have this the GDP down, so it's still manageable. But when you have stagflation, whereby you have a high inflation and a not growing economy, now if the Federal Reserve decide to cut interest rate to so-called stimulate economy, you will have the stimulation. See, you have the stimulation side, but your inflation will shoot through the roof. So, example, let's say now you are in a situation whereby you have stagflation. So now the government put in more money to the market, okay, and then you have to earn more money, right? So maybe your salary from $3,000 have increased to 3,300. Now, a 10% increment for anybody is a good raise. But if inflation is also 10%, then you have an issue, because that means that it negates everything. Now, if it's worse, if your boss gives you only 5% in growth or raise, and inflation go at 10%, gosh, you need to pay more. And if the worst thing is, if in a sector whereby your boss doesn't give you more raise and the world inflation continue to go up by another 10%, oh my God, then you are in serious trouble. So this is what I mean by a stagflation. And I feel that it's going to hit us very soon. Now, how soon will that be? That will likely be in late December or early March next year. Okay? So this is something that I personally feel, and it's not that I said that. California gas price has hit $6 per gallon. Oh my God. As fuel costs jump nearly 30 cents in a week across the US. So basically, you must understand, it was only at about $4.80 per gallon, and now it's at $6. That's a lot of money, all right, because you don't use 1 gallon, obviously. So this is something that is happening around in US, and that is pissing people off, and people are getting very upset. You can see this is the price of the gasoline. Now it was as high as in 2022, it was at high of $7. And that was because it was a post COVID, and that's why the thing was high. Then when the COVID is over, that's where the thing come down, everybody relax a little bit, and then there was another movement here in 2023 because of there's some concern. Then they managed to pull it back down, and now where it stayed about $5 for quite a while, suddenly you see a $7.48. Oh gosh. And there's no way Iran will stop whatever they're doing. And if this continue, then what do you expect to do, right? So that is something that I'm pretty sure that we are going to face some serious trouble at the second half of the year. Now, Federal Reserve have confirmed they are not going to raise interest rate, right? According to Jerome Powell and his friends. Now, the next FOMC meeting is 47 days later, and that means that Kevin Walsh, if he's coming in, will be the one sitting on the table. So you can see right now, the market is looking at this. The current interest rate now is at 3.5 to 3.75%. And now 95% believe that the market 95% believe that this will stay as is. But the 5% believe that there will be a rate cut because of the new Fed chief coming in. So that's what the market believe. And if you look back in the next month, the next one in July, all right, it's 87.9% expecting the rate to stay, while 11.7% expect a cut. So which means that the market is not looking at a rate cut for June and July. Now, that means that from today, May, 1st of May, June, and July, the market is not expecting a rate cut. Now, without a rate cut, and the stock market is going up. Well, is it because of growth? No, the growth has said it's not because of growth. Then the only reason is because of the AI-driven sentiment. So once this one shut the bailout or there's some issue, there will be some selling. All right. And if you look at the economic calendar today, today we have nothing much. We have S&P Global Manufacturing PMI, ISM data, which is expected to be about flat area, something down there. So today, do not see much big movement. Now next week, as you can see, we have the home sales, and then we have the ISM non-manufacturing. On Wednesday, we have the ADP, which is the big one. Okay, and then after that, we have the non-farm payroll, which is coming on Friday. All right, the unemployment rate is at 4.3%. I got this feeling that this could go to 4.4%. Okay, so all this is my personal take, and we let the market decide. But I think that we're going to see a lower number, probably about 145 over here. And maybe this will increase to 4.4%. Now, to me itself, anything above 4.5%, the market is going to ring a bell. Okay, and ring a bell means that the market will start to panic. And when the market panic, then that's where the selling comes. All right, so now I'll show you some very important fundamental that you don't see regularly on the mainstream media, because these are data. If they show the mainstream media, the market will definitely shake. So this is what happened. Now this is interesting. I want you to take a look. Now the S&P 500 on Monday closed at record high. Yes, indeed. And then after that, the next day, at least 1% more stocks hit a 52-week low than a high. Wait a minute. You are having an S&P 500 at a record high level. By right, you should have all the counters at a record high level, 52 weeks high. But apparently, there is more stocks at the 52 weeks low than the 52 weeks high. Now, in the 70 years of history in S&P 500, it happened only twice. And yesterday was one of them. And the second one, or the previous one, was the 3rd of January, year 2000. So, of course, you know me very well, right? When you see things like this, I will definitely go in and get into detail. So you can see very clearly the S&P 500 is indeed at a very high level. All right, very high, okay, over here. And you can see on the same side, you see that the more stocks are at the new low. All right, that is something very credible. Now, normally when it's new low, it's the market coming down. Okay, you can see that. But you do not see a market going new high and yet your stocks going down. So what is the reason? Because that means that apart than all those companies that do AI, the remaining companies that are doing non-AI is having issue. And because of that itself, right, we are just very near for potential big problem. So again, this one was mentioned on the 3rd of January 2000, right? So let's go to that. So you can see in January 2000, that is what happened. The market, okay, I think I need to be fair. I know the S&P instead. Hold on. Take me a while. Earlier one was Dow Jones, but since we are looking at S&P, we have to be fair to the statistics. We will go to the S&P instead, okay? Just give me one more. Now we are done. Okay, so January 3rd, year 2000. January 3rd, 2000. Okay, somewhere here. Okay, so let's take a look, yeah? On January 3rd, 2000 is somewhere here, okay? So what you see, everybody, this is what I meant. This is crazy, right? Yes, and so you can see that as what I told you earlier, okay? Then on January 3rd, when this thing happened, where the market S&P is at high, yet the stocks coming that's performing is lower, the market still tried to go up. Then there was a breakdown, and then after that, the market go up new high. So at that junction itself, that makes people feel that everything is okay. Whatever this happened is fake. But remember, I told you guys that I do not see the inflation problem to hit us until 3 months later. So you book January and plus 3 months later, we are here. And then what happened? Boom, the S&P collapsed. All right. Now imagine that it happened again to today's time frame. Because back then, the S&P 500 was trading at about 3,400. And it went down to a low of 2,300, example. So it's down by 1,100 points. So that is more than 20% drop. Can you see that? So the thing is this, if this is to really happen or manifest, then we are looking at potentially in this June-July period, we may see some real selling. I repeat, I don't think it will happen immediately. It's not possible. It doesn't work that way. Normally, such a calamity will happen around 2 months later. So likelihood, this June, July, be very careful of the stock market. There could be some serious selling, June, July market. Okay? So I tell you guys, so I'm going to put there June, July. 2026. Okay, I suspect that there will be a pullback of magnitude between June or July. Okay, let's see whether would I be correct, and of course, if I'm right, then of course let's take some money from it. Okay, So that is what I want to share with you on the global market front. All right, actually there's more to share, but I realize that time as moving. All right, if you want to see more of this incredible market news, all right, what you can do is this: go to CRAZII.com. Yes, go to Twitter or X, and then go to CRAZII.com. Okay, you will see this particular me over here. All right, and then you subscribe, and you will see a lot of very good information there. Okay, just like this one, the PCE is at 3.5, the core is 3.2, and the GDP is 2%. That means that the market or the economy is losing momentum right now. Okay, so go and take a look at this. Yeah. Okay, so now let's go into our own technical. All right, I know you've been waiting for this. So let's see what is happening now in the market. Okay. Okay, so today is the Friday, so expect the market to be a bit slow, but still it's the first of the month. The market will still do some portfolio rearrangement. So now the thing is this: today's OP, right? The OP for gold today is at 46.22, and now it's trading back above to or back near to OP. Earlier was lower. Okay, so today we have a very interesting method. We have the market above the MLP, so by default the market is more to the buy than the sell side. Yeah. Second, the market now is below the MA30, so the bearishness in the market is supposed to be there. Number three, we have the pivot 2 today, which is very nearby to the MA200. So MA200 and the pivot 2 are very close by. It form a stack. And when you form a stack, there's an issue. It may cause a bit of what you call attraction. So the market maybe, yeah, pull down to go down to MLP or MA200 or MA or pivot 2, it is possible. Okay, so KSI is red, KCX is blue, so it's bearish. So you may ask the question, then what will bring the gold down? Well, if Donald Trump and friends again go crazy over the weekend and again threaten Iran with all this sort of firing and anything here, and over the weekend it lost $50 again, so it's possible for it to jump down to touch the MA 200. And in fact, the last few days, I was telling my friends around me and those in Thailand that the MA 200 is a very strong base. As you can see, every time when the market touches this number 4570, around there, the market will buy up. All right, 4570 approximate. Yeah. Okay. So we see the gold today, the 5-minute chart first, and I'll show you the 4570. Okay, take a look. Now, this is the gold today, very flat in the morning. All right, didn't move much. Okay, and then it went up and it stopped exactly at the halfway mark. The halfway mark means that it's between the KOP to the KTR plus 1, the halfway. So it stopped exactly at the halfway mark. That tells me that the market is a little bit weak today. Then we have a blue diamond, and you draw a blue diamond with a diamond line. You notice that the market didn't go up, it came down. Now, this is a typical sign of a bit of selling. Okay, then now we have a second blue diamond appearing, and now it's stabilizing above. So let's see whether can it cross above the OP. But if the market really later on suddenly gush down, then there is a very high chance you'll see the 4604 get traded. Now, 4604 is a KTR minus 1. Do not just put exactly there unless you're expecting more. So if you can, just put a 4605.5. Giving 1 point above the KTR level is always a good practice. If you really think that the market will go much lower, then fine, you can put a KTR minus 1, the exact number. But if you think that the market will be a touch and go, then always give 1 point buffer or advantage to the market so that the market will feel you. All right. So same thing, if you are selling or buying gold, then the KTR one is 4641, right? So what you do, you give a TP at 4640. Okay. All right. So like that itself, right? You always give 1 point and more to the market. Okay. So consider this if you want to get your TP done on time or on target. Okay. This is very, very important. All right, traders, just take note of that. I'll take a picture of this. So remind myself too at the same time. Yeah. Okay, all right. So that is gold. Now let me show you what this one I told you about the MA 200, right? So let's go the chart smaller. Okay, today the internet is not as good as the last few days, so I need to make sure I use it well. Okay, so 4574 is today's moving average. Now every day the MA change a little bit, yeah, take note of that. So I make the chart smaller, okay? And you can see the last few days that when gold actually come down, it stopped at the MA 200 here, right? Can you see that? Yeah, it stopped there very nicely here. And then after that, rebounded, okay, rebounded here, came back down, stopped here again. But when it crashed lower. But when it rebound, it stays above it again and went up, right? So I suspect if later on there's some selling, this will come back down again to test here, okay? All right, now there's a KCB today at 4545. This is a potential KCB support level. So if you look at the whole goal, it does seem to be a bit of a recovery from the bottom. So if the gold do come down, first target is MA 200, second target will be the 4545 KCB level. Okay, so that's how I see the general big picture. Okay, so that is how and why we do not have the moving average that those typically a linear line for the MA. We put a straight line across so they can see this better. So CRAZII as another market is very different. We do not use the normal way of using TA. We use it in a very different way to make it more logical. Okay, so we have the dollar yen. Now, dollar yen, I not covered this for a long time, and I really missed it because just a couple of days ago, I was telling my friend that I think that the BOJ will intervene. And I really forgot about this. And yesterday, oh my God, the BOJ came in at 160. They slammed it down all the way to 155. Five big ones, okay? So why the BOJ want to come in? Because the yen is getting a bit ridiculous, and that's why the Bank of Japan come in to intervene. But I can tell you for one straight up, right? Whenever there's such intervene, it's waste of money, waste of time. The market is going to just recover. So guys, you can see while the intervention happened by the BOJ, the market was buying. The market was buying based on our KSI indicator. The boys are buying. So basically, it's like BOJ sending free money to the market. So of course you say, KL, BOJ is a government. How can you say that KSI can be green? Your market is down, or KSI is spoiled. I've seen this many times. And don't believe me, guys, go back to dollar yen chart, check all the intervention. You look at the KSI and you will know the answer. Okay? So rather than I tell you my answer, why don't you do your own research and then you will know better for yourself. Okay? Go and take a look. Yeah. So what's the impact of this intervention? I mean, honestly, nothing much. Usually when there's an intervention, the Nikkei will move down by at least 5%, but today the Nikkei hardly moved. The market don't really care at the moment right now. So that's what is happening. So this intervention to me has no impact. And last but not least, you can see the Dow Jones now. The Dow Jones yesterday caught off guard. My God, honestly caught me off guard. I expect the Dow Jones to go down lower, but it didn't. In fact, it opens and started to trade above OP and went up. So of course, we have to follow through. So we cut my short position and turned long in the market. And luckily, we did that. The market went up, break the MLP and all the way. Okay. So now where are we? We are now almost at the record high level. Okay, we're almost there. I suspect the market really need to do the double top just for the sake of people coming in to buy. And then after that, maybe the real selling come in. Now, the Dow Jones going up is because they expect the Strait of Hormuz to be open. They expect that the whole thing will be ending. And of course, there's a bit of this, what we consider as the Petronic field because Donald Trump was assassinated and failed. And of course, the whole White House, what they call correspondent dinner, really looks very funny. The way the guards are everywhere, but then and the the attacker itself is such a genius in his studies and academic. So to make all these silly mistake, I don't buy that, honestly. So anyway, today for the Dow, it's above OP, above pivot 1. So never fight the OP, never fight the pivot. If it's above OP, above pivot 1, you just stay to the buy side, okay? Do not sell. Now, if you want to sell, the market must be below OP. That's the only thing. And there is a 4 diamond here, right? So having a 4 diamond here will give you the extra little bit of information to put a line here, which you notice that if you put a line there, okay, let's bring it down a little bit. Okay. Now, if you notice, your today KCL is there 49753, is it? Okay, 753. The KCL line is the same number with the diamond line. Diamond line is based on the closing that has the diamond, right? KCL is based on the color change that comes with the KSI. So which means that when the market was CCRY with the KSI green, the KCL will be there. So therefore, what we have is that the KCL is stacked with diamond line, and we have said this many times before. When you have KCL stacked with diamond line, it's actually a very powerful line. So if the market stay above KCL, stay to the buy side. If the market breaks below OP and break below the KCL, then you have some selling. Okay, so take note the number 49753. Okay, all right, am I correct? 53, can't really see exactly. Let me just double confirm. Yep, correct, 753. So the Dow Jones must stay above 49,753 for further upside for the Dow Jones. All right, so that will be the final thing that I will share for today. Okay, there's a request to do Bitcoin. Okay, I have about 1 more minute to do Bitcoin. Let me do Bitcoin for you. No problem. I'm okay. Right. So this is Bitcoin. Bitcoin today got no pivot. Yeah, today got no pivot. Okay, no pivots. But the KSI is green, the bar is red, so we have an issue here, and we have a compression. The MA200, the long-term chart, long-term lines above, the MA30 is on the top, at the bottom. So what we have is that short-term the market is bullish, long-term the market is bearish, so there's compression at the moment right now. So you don't expect the Bitcoin to be big. Now, if Bitcoin choose whichever side, if you choose above it and go up and break the MA200, yes, then it will slam all, it will go all the way to 38,000. But the vice versa, if the market comes down, the support if you'll be looking for will be at the MA30 at 75,000. Now, I don't think the Bitcoin will do much movement unless over the weekend something really drastic happens to something, and then the Bitcoin will move. So at the moment now, I think what you should do is just stay locked, watch the market closely, and don't do anything first. That is my personal view for Bitcoin. Okay. All right, guys, that will be all for today. Thank you very much. I will be now leaving to next country. It's very tiring for me. I hope that you appreciate my sharing every day, and I will see you. All right. So Monday, let's see whether I have time to do a live sharing with you. Bye-bye.